Congratulations! You found the Santu Pirls Stock Market Commentary for Sunday, July 12th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio declined from 0.73 to 0.61, falling further into bearish territory. The total count of securities in bullish or bearish patterns rose 3% to 3,132. The count of bearish stocks increased 11%, while the count of stocks in bullish patterns decreased 8%. The Santu Pirls PNF Market Breadth Summary Chart shows us a market now 7 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 176 points for the 12th decline in 23 weeks. At a negative 272.22 points, it continues below all 9 tops above plus 100 and above 3 of the 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq had 1 accumulation day and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode. Momentum. As expected in last week's commentary, at Tuesday 7/7 close, the CCI 20 daily had 6 consecutive days below zero for a change of Woody's trend to down. At minus 58.70, the CCI 20 daily is just outside the plus or minus 50 range for a valid zero-line reject short entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 51 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly dropped sharply 1 week ago, but continues in a Woody's uptrend. At minus 32.02, it remains within the plus or minus 50 range for a valid zero-line reject long entry signal should the market rise sufficiently this week. Industry rotation the last 2 weeks. 4 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, S&P Retail continues in the top 5. REITs has entered the top 5. Gold and silver continues in the bottom 5. Oil services has re-entered the bottom 5. Computer hardware and networkers have left the bottom 5. Bearish disk drives continues in the bottom 5. Semis has entered the bottom 5. KBW Bank and brokers have left the top 5. Focused this week, we recommend on YouTube Stefan Molyneux's analysis of the China crash and its potential impact on the world, including parallels to the U.S. 1929 stock market crash and the rise of Hitler in Germany. Mr. Molyneux is a successful entrepreneur in his own right and speaks as a promoter of free markets and of the strongly negative economic effects of government-created economic bubbles. Some of his key points are shown in the following PowerPoint slides from the YouTube presentation, The Fall of China. There will be no recovery. Thank you for tuning in for this week's Sand to Pearls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Ratio Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you're looking forward to a great week coming up, and wishing you true success.